Do you think that if we see any further dips in the yen, that would be a buying opportunity if the bias for the yen may be stronger?
Yeah, I think one of the fundamental things we've highlighted for most of the year is that when you think about FX, it's a great thematic market. There's things that work quite well. It's always carry. The problem with carry is it usually suffers very tremendous drawdowns and it happens very quickly because there's two conditions that drive a carry trade, and it's volatility and it's also rate divergence. And we know fundamentally that rate divergence is changing. Essentially, rates are moving in the same direction. The other thing is we know there's a lot more volatility, and we've been pushing back on Goldilocks for months. So I think part of this is that we are going to move into a more bullish market for the yen, largely as a function of the unwinding of the structural carry trade. I think there's a lot of money that's been repatriated outside Japan. A lot of that money is going to find itself home. And we just think the rest of the year, there's just so many risk events. We don't know the exact trigger. I think it's going to be very clear that the U.S. election is going to be something that people should focus on, probably even starting this week with the Democratic National Committee, our convention. But essentially going into September, October, the election is still a toss-up. And we still have to worry about tariffs. We have to worry about trade wars. We have to worry about another thing that's very critical is the global economy outside the U.S. is not very robust. So we are bullish the yen. We're bullish on volatility. We're bullish the dollar and more defensive positioning in the FX market. That's the way we're kind of looking at it.
Okay, so you mentioned trade wars and tariffs. I mean, one market that I look at very closely is China. How are you looking at CNY, given that it has also been a funding currency in all this carry trade as well? And while the unwind might not be happening just yet, there is that potential for it down the road.
I think a nice way to picture it is these two currencies should uncorrelate. They've been very correlated because of positioning, and the unwinding of the carry trade saw everything that was a funder. Japan was a great funder because, again, real rates are low, volatility was low, the BOJ basically was falling behind the curve. But China was also a great funder because there was no volatility in the currency, interest rates are low. Essentially, the PBOCs had to basically ease financial conditions to help boost the economy. So they are both perennial funders. I think where things are going to change is that the economic outlook in China is slowing. And it's slowing relative to the U.S., and they can't seem to get the economy moving in the right direction that would kickstart capital flows back into China. So I think a big piece of it is if we go into the U.S. election, the more that the polls start to tighten again, which is probably very likely, Kamala Harris got a nice little bump, and that's expected from the change, but the polls are probably going to be very volatile. So if there's any kind of adjustment in the polls where they start to look more neck and neck, then we have to start worrying about tariffs, trade wars, all the thing that's an idiosyncratic risk to China, not as much as Japan. So I think the correlations start to change again.
And